Welcome to today's video technical update presented by CMS Forex. It is Monday, December 7th, 2009. I'm Fan Yang, your technical analyst, and I will go over some developments in the Forex market. We continue monitoring the pound-dollar pair, and we'll also assess the euro-dollar and the dollar-Japanese yen pair. This video is being prepared at about 4:15 p.m. Eastern Standard Time, near the close of the US session. Starting with the pound-dollar pair, we see here in the 4-hour time frame our previous outlook here as the pair completed a bearish Gartley. Actually, the original projection was to here, and there were some signs here of a reversal, but this was a very unconvincing break of our previous power line here, and the market continued to rally slightly more. Came up to here. This looked like it was, it reached our completion and started to head down. This was a inside candle. And then we had one more exhaustion move, and then finally we had this decline. We had another kickback, and then at the moment we're back down to here. Now our projection, if you remember, was our previous slightly below our previous low here at 1.6270. A little more conservative would be 1.63. However, the market, as you can see, started the week, and now I'm back in the 1-hour time frame. It started the week with bottoming action. So here basically we had some early exit signals. Now when the market is near your target, one of the things is to monitor the price action, and if the price action continues in that direction aggressively, you would think about extending the period of holding period. However, if the market starts to reverse early, then you need to be flexible and look at the early exit signals. So here we had a reversal combination here, and being that this is mainly a range approach, exits should be earlier, because if you apply any type of entry and exit approaches in a range market, it tends to lag. So one of the things we do to try to accommodate for that is to look for earlier exit signal. So this would have been an early one, and this was the second one. Now it broke our intermediate trend line, and now the market is continuing to rally. So our original outlook is still valid, but it seems like the market is struggling to continue, and we'll see if when the market reaches this 1.6550 area or even below that, maybe in this consolidation range, we'll see if the market can top off and continue declining. What we want to do is, after this market creates a couple of lows, we want to connect the short-term support, which should be a upsloping trend line, and if that breaks, we can consider the continuation. But we might have to look at the 15-minute time frame if we were planning for this last leg to reach our projection down here. Okay. In any case, we basically saw an early exit signal, and we are considering whether or not to keep our bearish outlook in the short term, and we'll see that in the upcoming Asian session. Our next pair is the euro-dollar pair. We're looking at the daily time frame here, and I'm using the moving average. Usually I just use trend lines, but here you see, they're pretty. You could use both of them. The moving average is more of a smoothed out trend line here. So you see that the market, it broke this long-term support, and now is testing its intermediate support. And this means basically the market has slowed down and looks to create some reversal patterns here. It's already topped off. There was an exhaustion move here, followed by an extremely, relatively strong bearish candle here. So there are a lot of bearish signals, and this is a weakness formation here. So we do see possibility of this breaking, even though at the moment it is testing it and it looks to have stalled the decline. So looking at the 4-hour time frame, well, before we move on, we see that here we have a divergence which is already materializing. So okay, so now back to the 4-hour time frame, we see that the market is has penetrated this previous intermediate support, is struggling to sustain that break, but we'll see in the next couple of sessions, in the Asian and the European session, whether or not the market can sustain below. There may be a kickback or a pullback towards this 1.5 area, or rather, if there is a rally, we can expect some kind of resistance here, and if it does hold up, then we are in a bearish mode. See, at the moment this is a swing, but it hasn't created a confirmation. This is a signal, but we need a confirmation, and that would come from a significant high that is lower than our previous high here. Alright, and at the moment it seems like we are due for correction, so we'll look for the market to rally in the very near term and look for topping action here. It may actually top off here at 1.49. See, right now we have this range developing, a consolidation range developing for the next couple of sessions. So if the market tops off and there is another bearish candle that is a strong one, then we could consider the market continuing to at least test this 1.46, 1.45 area. Alright, so that's the euro dollar. Finally, let's take a look at the US dollar Japanese yen pair. This is the daily time frame, just to remind us of our underlying conditions. Here we have a broken short-term and an intermediate-term resistance after a clear out, so this is a strength formation. However, you see that the market came up to 78.6% almost exactly, and has since paused, showing this is inside bar, so it's showing some reversal or bearish interest here, at least in the short term. In the 4-hour time frame, we see that this is materializing, as we had a bullish divergence here, the top here with the top here, in the stochastic top here with the top here. So now we have a decline, so we're testing this short-term trend line, and we'll see if it holds. In any case, we're basically in a retracement, so we'll draw some Fibonacci retracement levels. Even if the market takes it down to here, we see that this power line here should hold around 87.50, and then if that holds, the market is very likely to continue to now using this as a projection to the 93.50, 94 area. Looking at back to the daily, that's this area here, 94, which is basically around 127% expanded retracement of this decline, and also matches the longer term declining trend line. So in the short term, we expect some kind of rally here from our power line, from our retracement here, but eventually in the more intermediate term, we expect the market to eventually reach this, or test this power line, test this declining trend line around the 94 area. One more thing I want to add for this pair is that since this is still in a long-term decline, we should limit any bullish considerations. It has to be very aggressive, and you have to monitor it very closely. In fact, if the market reaches up here, we are bearish again, and we will start planning a bearish outlook at 94 area. Alright, and that wraps up today's update. Make sure to visit fxtimes.com for your latest analysis, live coverage events, and educational resources in the Forex market. Once again, I'm Fan Yang, your technical analyst here at CMS Forex, wishing you good trading.